Friends, we are now going to learn the system of non-integrated financial accounting. Under this system, as discussed, what we are going to do is we are going to maintain separate records for financial transactions and we are going to maintain a separate set of book for the cost related transactions. Let me take a very simple example in order to explain the difference between the normal recording of financial transactions and the non-integrated manner of recording the transactions. Let's say we buy material on credit from a supplier for rupees 1 lakh. Now under the normal system of accounting, how are we going to pass this entry for purchase? We are going to say purchase account debit 1 lakh, and since we have purchased this material on credit, we are going to say to payable or to creditor account 1 lakh. Alright, so the entry for purchase will be purchase account debit 1 lakh to payable or to sundry creditor or to creditor account 1 lakh. Then let us say we make a payment of 50,000 to the creditor. What is the entry that we are going to pass? We are going to pass a payment entry. It can be either cash account or bank account that we are going to use for making the payment, and the entry will be payable account debit or creditor account or sundry creditor account debit 50,000 to cash or bank as the case may be 50,000. And now we will still have a balance pending of rupees 50,000. Let us say by the balance sheet date, alright, at the end of the period, we have not made the payment of this 50,000. Where will it appear? It will appear in the balance sheet side as a liability. It will show that we are supposed to still pay 50,000 to the creditor. Now this is how the normal system of accounting works. But when we talk about cost related accounting and when we talk about recording only cost related information, we are going to distance ourselves. We are going to go away from the normal system of accounting, and we are going to say we will record only information that is related to the cost of the product. We will record the purchase, we will record the material that has come in, but we as a cost accountant don't care whether the payment has been made or it is not made. We don't care whether it was a cash purchase or it was a credit purchase. We don't care whether we are supposed to make any payment to the creditor or not. We don't want to, we as a cost accountant don't care as to what is the balance that is remaining payable to the creditor. All that we are concerned with is we bought some material and this material was purchased at 1 lakh. So when we are maintaining only the cost related information, we are going to record the purchase of material. We are going to say, okay, material has come in, let us record that. But whether we paid for that material or we did not pay, whether it was cash or credit, whether some part payment is made or not made, whether balance is there or not there, we are not concerned. Who will be concerned with this? The financial accountant will be concerned with this. The guy who is doing the financial accounting, he says, I don't care what you have done with the material. I don't care whether the material is direct or indirect. I don't care whether the material is used for product A or product B. All that I know as a financial accountant is some material was purchased, and for this material either we paid cash or we are still supposed to pay some amount. I know that some purchase was there and some balance is payable. So that is what is the role of the financial accountant. He is concerned with the assets and liabilities. He is concerned with the financial transactions. He is concerned with the cash flows. But the cost accountant, what is he concerned with? He is concerned with only with the cost related information. He is not going to maintain the statement of assets and liabilities. He is not going to maintain a statement of how much is payable to whom, how much is receivable from whom. The cost accountant is going to record only the costing related information. Alright, so we are going to maintain two separate set of accounts and we are going to learn how we are going to maintain the cost accounting records. Friends, now let's deep dive into the cost accounting records. Now, in the cost accounting records, we said we are going to maintain only the cost related information. And I also said that we are not going to maintain the statement of what is payable, what is receivable. We said that the cost accountant is not concerned at all whether payment was made or it was not made. He is not concerned at all with what is the balance outstanding. So does it mean that we are going to do only single entry? Does it mean that we are going to use the single entry system of accounting where we will record only one side of the transaction, that is purchase, and we are not going to record the other side of the transaction, that is the payment made or the balance payable? The answer is no. The cost accounting records are also going to be maintained using the dual entry system. For every debit there is going to be a credit, but then we are going to use a dummy account. We are going to use a dummy like account which is going to be called as the cost ledger control account or general ledger adjustment account. So if there is a transaction which involves cost information as well as financial information, we are going to record the cost related information in appropriate ledger heads and all the financial related information. In order to complete the dual entry system of accounting, we are either going to debit or credit to the cost ledger control account or general ledger adjustment account. It's also popularly called as GLA account. So what are we going to do? We are going to record the purchases. We are going to say raw material account debit because the raw material has come in, and generally we would have credited either the cash account, bank account or the creditor account, but here we are going to say we don't care about cash, bank, balance, etc. We will directly credit it to a ledger called as cost ledger control account or general ledger adjustment account. Similarly, when we make payment to workers, we are going to pass an entry for this wage payment. We are going to say wage account debit, payment to workers, but credit we are not going to use cash, bank or payable. What are we going to do? We are going to credit the cost ledger control account or general ledger adjustment account. So to summarize, in non-integrated system what we are going to do is in the cost accounting records, we are going to maintain one account called as cost ledger control account, and in this cost ledger control account, also called as general ledger adjustment account, we are going to debit and credit all the financial related information. Only the cost ledgers, very few ledgers are going to be maintained in the costing related records. Alright, now with this what will happen is the financial related transactions, the transactions which are purely of a financial nature will get recorded only in the financial accounts and they will never appear in the cost related accounts. For example, let's go back to our entry. We said we are purchasing 1 lakh rupee of raw material, and out of this 1 lakh rupee of raw material, let us say we purchased everything on credit and we have made payment for 50,000. How much is still left to be paid? 50,000 rupees is still left. Let us say we make another payment of 30,000 through cash. So we will say creditor account debit to cash account 30,000 towards payment. Now how much is still left? We are left with 20,000. Friends, what we need to understand is that this payment of 30,000 is a pure financial nature and it does not involve the cost related records. We are not going to pass any entry in the cost related records. Further, let us say this 20,000 we decided we are not going to pay. We decided we are going to write it off. So in the financial accounts, we will pass a write-off entry. We will reverse the credit. We will say creditor account debit 20,000 to write-off accounts 20,000, and we will say payment is no longer required to be made. We have written off an account, but this entry will never appear in the cost related records. It is of a pure financial nature. Pure financial entries such as interest, bad debts, write-offs, etc. will appear only in the financial statements and it will not appear in the cost accounting records. What is going to appear in the cost accounting records? Only the information which is related to the cost of the product or service. Any expenditure that we incur which has a bearing with the product or service and which is related to that product or service, we are going to record in the cost related records. Otherwise, we are not going to record.